Hi, welcome to the Market Alert for Wednesday, the 31st of August 2016. So yesterday, the 30th, you can see the markets here. This is the live recording. You can see the market very much sideways, waiting for the consumer sentiment at 3 p.m. We had a sell signal that wasn't filled beforehand. We then had a second one that wasn't filled beforehand. We had a buy signal that wasn't filled before the news, and then you can see here how sideways the market was because of all of the potential signals, which of course none were actually filled. The news then came out, and you can see I removed all of the trades there, and then the news was released into the market, which, if you have a look, was far and above better than forecast, coming out at 101.1, forecast at 97.2. So you've got a situation where you've got fantastic news, and if I just go back to the right place, there we go, we see the market actually moving sideways to lower. So this is a bit of an odd one, and I did receive an email about this. Why is it the news was so good? And in fact, the figures were better than forecast since 2007. So again, interestingly enough, that these consumer sentiment is showing a peak back to 2007 prior to the 2008 crash as well. So then at this point the market wasn't doing anything, so I sent out a note to say, look, it's like watching paint dry, it's not doing anything. This sell signal was filled, and if I just fast forward all the way through, you can see the market just traded sideways, and then eventually did make its way all the way down to the actual scalp there, but it was just torturous because, as you can see here, the range is only just over 50 points, and the range within this part is only about 10 to 15 as it traded through that sideways range there for several hours. And the other reason why the market moved lower as well, which you've got to keep in mind, as it says here, good news is bad news again, and the stock market moved lower because the US dollar moved higher, and the dollar strengthened on the basis that this good news, consumer news, which obviously is good news for the US dollar, that moves higher, stock market moves lower. But at the back of all of this, of course, and also taking Friday into consideration with the non-farm payroll figures, is that Yellen is being painted into a corner where she may have to actually increase interest rates at the September, the next month's live FOMC meeting. Every quarter they have a live FOMC meeting, and that's where it's decided whether they're going to increase interest rates or not. And therefore, the good news on the consumer sentiment is not good news for Yellen, because she probably doesn't even want to increase interest rates when Japan, Germany and everywhere else is going negative. And the lack of QE at the moment is sending the yields lower, creating more and more negative yields. Now 33% of all of the debt that's printed is actually negative. And if you saw yesterday that the Germans now, fastest selling thing over there is safes as well. So it's a situation where the market, or the economic news, is actually going to force Yellen to possibly, and I say possibly because it'll be very rare that a Fed chairperson will actually increase interest rates prior to a US election, but again, the market moving lower because there's the potential for interest rates to increase. And if you look at the daily chart going back to the beginning of the year, I'll just move back here, you can see, oops, I've gone too far. You can see there the last 0.25% increase in interest rates sent the market tumbling over 2,000 points until Yellen made a call to Draghi, Carney, and the market then bottomed and moved all the way back. So an interesting picture is emerging here, where we've got a situation where the market's at all-time highs. Consumer sentiment is the highest since 2007, and if the non-farm payroll figures come out higher than forecast, and the labour participation rate is higher than forecast and higher than the previous one as well, which you need to look at as well, then she's possibly going to have to be forced to actually increase rates, which she will not want to do. But to take it from me, I'll be very surprised if they do. They're going to look for any excuse to not increase interest rates because of the impact it will have on, one, the stock market, and two, also the yields. So if you look at the daily chart, you can see a very interesting picture here as well. The last 2 days following Friday's session are inside bars, which means that the range is inside of the previous bars, high and low. And again, what this is showing us is that the market is waiting for that economic news on Friday, the actual non-farm payroll figures. Today it's Wednesday, so that means crude oil inventories. Oil also collapsing yesterday as well, moving sharply lower. So the market is going to be interested in this figure today. If it shows a 1.1 million barrel surplus, last week was 2.5 million barrels. So the more surplus, then the more pressure on crude oil as well. And of course, this is being manipulated at the moment to get the price up, to try and generate some profits to offset the fracking loans, which runs into trillions of dollars that were made a couple of years ago, well, probably a bit more than a couple of years ago now. And of course, with the drop of 70% in the crude oil price during last year, this is having a massive effect on these repayments of the fracking loans. So that's why you're seeing crude oil being manipulated to the upside all the time. And then finally this morning we've got the implied volatility, 1056, or slightly on yesterday, and that's reflected here, but we're still in that sort of 10% range. We've been down to 891 on the 19th of August, so it's a case of just sitting on your hands waiting. But as night follows day, there's definitely some high volatility coming, but the market's likely to trade sideways as wait for Yellen to make a decision on interest rates. But we'll certainly get a bit of volatility in between. We haven't got to wait till the middle of September. Everybody's back to work next week as well. Everything's back to normal, and that could preempt a drop in the stock market, so and all sorts of volatility. So she has her excuse not to actually increase interest rates as well, saying that there is uncertainty, the usual rhetoric and excuses by the Federal Reserve. Right, that's it for today. I will let you know if I see anything during today, but if there's a trade within the first half an hour or so, then you don't really want to be in for the crude oil figures at 3:30. Used to be a medium impact news item, now a high impact one, so you're better off standing aside. Right, that's it. I will see you in tomorrow's. Thanks for watching. See you in the next one.